good afternoon. You're watching Markets at Noon on Etnow. I'm Anisha Jain. With me is Ajay Sharma. And not much to complain at this point of time. Comfortably above 19,600 and a lot of pockets actually doing well. Let me just highlight a few before we move forward. Defense is one theme, of course, which is doing well. We have Cochin Shipyard, Garden Reach, Mazgaon Dock. All of these stocks are firing away in the trading session. Earnings reaction also setting in. So Bandhan Bank, CCL Products, as well as JSW Energy. A bit of a lukewarm reaction coming into all of these counters. On the gaining side, you also have Sterling and Wilson Solar, Latent View, as well as Z Entertainment, which is spiking up. Z is very interesting because over the last couple of trading sessions, we have seen a perk up of almost 10 to 15% on the stock. No incremental news flow, but a lot of buying interest. Earnings today in terms of HDFC Bank, LTI, Mindtree, Tata Elxsi. And talking about IT, of course, it's that pack which is showing a great amount of momentum, Ajay, at this point of time. Over the last couple of days, we have seen almost a 8 to 10% rally in all of these counters, and not sure what changed.
Actually, the beautiful part of the market today is Bank Nifty in the red.
Yeah, and IT is again out of
And Nifty is above the 19,600 level, almost making a dash towards 19,700 because the highest point is 19,650 or thereabout. Why is that? Because IT has come back, of course, for second or third day in a row. But Reliance Industry is also nudging almost 1%. It'll be interesting to see how long can the market remain healthy with one large part of the market not really participating, the largest weight actually, which is financials. Also, you spoke about Z. You'll be surprised that, Anisha, if you look at the shareholding pattern of Z Interest, last 2 quarters, one of the funds which have been adding is Narain's fund, Pru.
Oh.
Yes. And that, the average, there's no scientific, but my understanding is the average price addition is around 180 rupees, 185 rupees. The lowest of last quarter was 175. And this stock has defied, in fact, it has laughed in the face of all the shorters last 2-3 days.
Yeah, that's true. Yeah.
Friday 10% and then gaining very smartly in trade today as well. The other point is that the advanced decline is very active. The mid cap and the small cap end of the basket, if you see, both are at days high. So despite of the fact that banking is sulking in trade, markets look very healthy right now. We have Aditya Arora, who's joining us to talk more about technicals. Aditya, thanks for joining us today. How do you see this, kind of very counter moves coming in on Nifty, Bank Nifty? I don't remember the last time we saw both of them move in different directions. And how long can the largest weight of the market sag in trade? Either it'll drag down the market overall, or it'll also join the rally with Nifty. What are your thoughts on levels?
Good noon, Ajay sir. Thanks for having me on the show. So I think this kind of a market was playing out previously also, wherein IT was actually underperforming since last 3 to 6 months, and banking was taking the lead, was driving the market higher. Again, now, IT is rebounding, and that is bound to happen because now Fed is turning less hawkish and people expect that this could be the last rate hike. So that is very bullish for the market. Dollar has corrected from 103 level to almost, dollar index has corrected from 103 to 100. That is very positive for emerging market. India would outperform definitely in that case. So this kind of a sector rotation always happens in a bull market, wherein sometimes banking stocks lead, other times IT stocks come in action. So this sector rotation kind of you can say it's a relay race. One sector will take a lead, another will take a backseat. This will keep happening. So IT sector is bound to do well for some time because of less hawkish Fed, and banking will also catch up. So I'm pretty bullish on the market. So these are the kind of so this level of 19,600 is a level friction zone for the market. This could be a zone wherein bulls and bears could have a fight, but eventually after 1 or 2 weeks of volatility, we are again going to continue our uptrend towards 20,000.
What about the other part of the market, IT? Again, in the face of all the bad news, bad commentary, not so great results, the entire basket has been rallying. In fact, the rally actually started last quarter with the Infosys stock falling 10%. Now that, if you look at the 3-4 month view, we may think that, yes, IT has moved up quite a lot since last quarter. But I was looking at the longer term chart and I was getting a sense that the IT index overall, if you look at, say, 2-year, 3-year or 5-year view, is breaking out of a long consolidation kind of a period. Is that true? Is the risk reward still okay to enter, or only on declines?
If we look from a long-term perspective, then it has been always observed that previous leader of a previous bull market never becomes the leader of a new bull market. So we saw leadership from 2020 to 21, wherein we saw stellar rise on Nasdaq, also stellar rise on Nifty IT index. But now that sector has become very overcrowded and also overvalued, considering the new disruptions are happening in the industry, as in AI is happening, automation is happening, ChatGPT is disrupting the markets. So similar kind of a phase was seen in auto industry around 2017-18, wherein Maruti had hit 10,000, and then a lot of disruptions started happening in terms of diesel car being introduced, new policies regarding diesel car, electronic vehicles being introduced. So that disruption delayed bullish market in auto sector for almost 4 years. Now we are seeing good action in Nifty auto index. So similar kind of phases there in Nifty IT index. A lot of disruption is happening. It's a bull market. IT sector will do well. It's just a rebound trade, but not a story wherein you can see exponential growth. Exponential growth is in other sector, consumer facing sectors. There we'll see good exponential growth.
Okay, so that's a take on some of the IT companies, but let's shift focus and talk about the other, stocks as well. What are your top recommendations right now, Aditya?
Good noon. My top recommendations would be from stocks which have given a recent breakout and volume accumulation has been seen. One stock which is very beaten down because of bad rules, because of bad news in the stock, that is MCX, which was almost down 10% when the bad news hit the market. But slowly the strong hands actually accumulated the counter at the lower levels. Now the stock is forming pretty bullish patterns. So MCX could be bought at 1598.50. Stop loss should be 1500. Target would be 1800. Second stock is from defense sector, Cochin Shipyard. We saw a lot of action in the defense sector, and this is a structural bull story. Defense sector would tend to outperform because financials are good, news flow is good, there's good FI buying in the sector. So defense sector will outperform. The stock which didn't perform in this sector was Cochin Shipyard. Now that is also giving a multi-week, multi-month breakout. So Cochin Shipyard could be bought at 680, 610 should be the stop loss, 820 to 850 should be the target.
Okay, Aditya, we'll let you go on that note. Appreciate you making time speaking with us. Cochin Shipyard already up around 7%, but Aditya is seeing more upside on that one.